All right, I want to talk some more about the French election and the implications there because there are very, very important implications there, but they're not the implications that are playing out in stock markets as you see since that result. That is something where I think there is a profound misreading of the actual results. And I want to talk about the real implications from the Macron victory, and he will almost certainly go on to win in the May 7th runoff. Okay, at least that's what the odds makers are showing now. And I know they showed, Hillary having like a 90% probability of winning, so you never know. But it looks now like Macron is the guy who's going to pull it off and will be the next president of France. Now, this has very, very important implications for the euro. For a long time, the euro has been, I should put it this way, um, underneath all of the pessimism and sort of bearish sentiment that surrounded the euro over the past couple of years was a very powerful combination of bullish factors. Austerity being one. Okay, austerity is literally the unprinting of money. Okay, and then you had monetary policy by the ECB, the negative interest rates, which itself that's functionally a tax. Okay, that removes euro. And it also has the deflationary aspect to it, right? It's the opposite of what the Fed is doing right now, raising interest rates, which, I've explained to you that um, the way to say it is not raising rates or lowering rates. It's raising prices, setting prices higher or setting prices lower. That's what rate adjustments do. So the negative interest rates, that was price cutting, setting prices lower. It's deflationary. That as well is very bullish, is a bullish factor for the currency. It literally means in a deflation, it literally means your money buys more, right? So it's reflected in the foreign exchange rate of that currency as a higher exchange rate relative to some other currency. So you had these underlying bullish factors that have been there for a long time for the euro. But overriding those things was political uncertainty. The idea that the EU could fall apart, that some countries might pull out and maybe go back to their own sovereign currency. There were fears about Greece doing that a couple of years ago, but I think everything really came to a head last year with the Brexit situation, where there was a growing belief that the next shoe to drop was going to be France, and in France, while Britain, the UK had its own currency, it never gave up the pound. If France were to pull out, that would be the end of the EU and the end of the euro. All right, or the beginning of the end of the euro. So this election, it eliminates that consequence. That is gone now. I think that the voters in France, for whatever reason, and I frankly don't understand it, because the euro has been a disaster for the EU, but all right, it's the way they voted, and I've said for a long time now that people were going to stick to the euro. They don't like austerity, but they don't understand the connection between giving up your own sovereign currency, essentially becoming a currency user as opposed to being a currency issuer, and the problems that causes. All right, so they don't like the austerity, but they don't see the link between the austerity and the euro. They like the euro. Okay, Europeans like the euro, so they were going to keep it. So, and when Marine Le Pen, as candidate, when she was talking about, she's going to take France off the euro, that kept the markets fearful, afraid of that possibility, of that potential outcome, and it kept pressure on the euro exchange rate. But that is gone now. That is gone. So all of these very bullish underlying fundamentals, the austerity, monetary policy. This guy coming in now, who is 100% aligned with the policies that have been in place for so long. More austerity, cuts in social spending, elimination and cuts, massive cuts and layoffs from state and government workers, that sort of thing. That's all going to add to it. So you had this kind of bubbling cauldron of bullish fundamentals underlying, that fear, that political fear, which now has been taken away. You have a market, if you want to talk just technically from the standpoint of market composition, you have a market with speculators very, very short the euro. In fact, they added to the shorts going into the election. All of that is going to be unwound. And it's not just the shorts getting unwound. They're all going to eventually get long the euro big time. So we got big time upside in the euro. That is the real consequence of the election that just happened on Sunday. As far as the stock market is concerned and the euphoria surrounding that, I've been over the numbers. We can go back and forth on this. I know all of you are celebrating and it's great times and the happy days are here again. But the numbers are what they are, all right? The economy is barely growing at all. Corporate profits have slowed significantly. They eke out corporate profits. They always do. They know how to massage the numbers. They know what the street expects. They know how to come in with the right numbers. So that's where it is. The big play here is euro. That's going to go up. The political uncertainty has been taken away. And all of that bullish fundamental, those underlying bullish fundamentals, they will come to the forefront now. And you have a market that is heavily, heavily short euro in the foreign exchange market. And boom, it's going to go up. That's what's going to happen.